Now, payday loan companies are to be investigated by the Office of Fair Trading. The firms offer loans at often very high rates of interest to workers, particularly the lower paid, who repay them at their next payday. But the borrowers run into difficulties if they can't pay the money back, and very quickly they end up racking up more in interest than they were originally lent. Our correspondent Darshana Soni has been to Leeds to talk to people who have taken out these kind of loans.
So there you are, no cash left till payday when...
Oh, no! Debbie in Rochdale has got a problem. Her washing machine is broken and she needs an emergency loan of £100 to get it fixed. Funds being sent over now.
They may not win any Academy Awards, but these adverts represent a £1 billion industry. Over 3 million people are likely to turn to these companies for money in the next 6 months, according to new research.
Any time of day, 7 days a week, and...
Payday loan shops have opened up in high streets across the country. They offer small, unsecured loans, which are supposed to tide people over until payday, but critics say they're targeting the most vulnerable.
People are going in desperate for money. They're lending them money at extortionate rates.
Keith Wyatt is a retired postal worker. After separating from his wife, he was struggling to pay his bills at the end of the month and took out 4 payday loans of £50.
But the interest rate now means that you're paying nearly 4,000%.
Yeah.
Which is an incredible amount of interest.
It's a ridiculous amount. I've got to be honest, you don't really think about the interest rates when you sign up. All you're interested in is getting the £50 in your pocket.
Because you're desperate for the money.
Yeah, yeah. And you can't get anywhere else. If I'd have had a credit card, I'd use that, you know, or bank loan or what have you, but you can't do it, so you just... They're making money out of people that haven't got any.
Many people like Mr. Wyatt can't get access to any other credit. Now critics are calling for better regulation. In the UK, there's no cap on annual percentage rates, unlike other European countries. In fact, many of the companies are American. They came to the UK precisely because regulation here is a lot lighter.
That's not any good for a person.
Debt advisory centres are calling for more transparency.
The biggest problem, I suppose, is the accrual of the money and the debt. It's where people are taking on a debt that's maybe seen as a short-term solution, but the reality is by the end of the month, if they can't afford to pay it back in full, then it just carries on, so it just accrues and accrues and gets larger and larger.
A payday loan from the money shop takes care of life's little emergencies.
The government says it will try to bring in a code of practice, but the lenders reject criticisms. A number of companies, including the money shop, told us they offer a legitimate service that covers a gap in the market, a gap that more and more families may fall into as the recession continues to bite. Darshana Soni, Channel 4 News, Leeds.
Now, loan companies say it can be cheaper to take out payday loans than go to your bank. True or false? Well, the fact-check team has been investigating. So if I desperately needed to borrow £100, what would be the cheapest way of going about it, short of asking my friends or family? What about just whacking it on my credit card? Taking out £100 cash on an M&S credit card, I'd be charged just £1.80 interest a month. Alternatively, there's the bank. So if I had a Halifax bank account and I went £100 into the red, the interest would cost me £30 a month. But if I go over my overdraft limit without agreeing it with the bank first, I'd have to pay £125 a month, much more expensive than a credit card. So could it be cheaper to get a payday loan? Well, if I went along to paydayloan.co.uk, borrowing £100 from them would cost me £25 a month in interest. But if I can't repay the loan at the end of the month, they'd let me pay only the interest. So after 4 months, I'd have paid £100 in interest, as much as I originally borrowed. So if you're convinced you could repay a payday loan within a month, that would work out cheaper than many bank overdraft fees. But it's much more expensive than putting the money on a credit card. However, today's survey found that 1 in 3 people who took out a payday loan couldn't pay it off at the end of a month. And that's when it starts getting very expensive. Well, a little earlier, I spoke to John Lamadé in Manchester. He's the Chief Executive of the Consumer Finance Association, a trade body for payday loan companies. And from Westminster, the Labour MP, Stella Creasy, who's campaigning against high-interest lending. John Lamadé, I expect you're going to tell me that the industry is much misunderstood, are you?
Well, certainly on the basis of this report today, because the data in it has been totally discredited. Out of the 2005 people that were interviewed, only 67 had actually taken out a payday loan.
But
now, if you want to...
But our fact-check team has been doing a bit of research, and it's definitely cheaper to put, if you were saying £100 loan, definitely cheaper to put that on a credit card, especially if you pay off the balance in full, or agree an overdraft with your bank. Much cheaper than getting a payday loan, isn't it?
And it's definitely more expensive to put that on your unauthorised overdraft.
Unauthorised overdraft, yes.
What we're offering is a choice for consumers. We're offering them the ability to have a small sum, short-term loan for people who've got bank accounts, who've got jobs, and who've got disposable income. It's their choice how they use that. Our customers all do have a choice. They do have bank accounts, they do have credit cards, but interestingly, they are choosing our loans because they know up front exactly what the cost is, which you never do with your bank overdraft or with your credit card.
Stella Creasy, it's a fair choice.
Well, I think it's outrageous that John is disdaining a company like Comres, which is a very respected research company. Let's be clear, the research shows that 67% of those taking out payday loans couldn't get credit from anywhere else. Actually, these aren't customers who have a choice in how to manage the fact that because the cost of living is going up, because wages are being frozen, and because unemployment is hitting millions of families across this country, they simply have too much month at the end of their money. And the choices they have about how they deal with that are very, very small. And that means all these payday loan companies, because it's unregulated in the UK, are just preying on them.
John Lamdy, you're preying on the vulnerable, aren't you?
Let's be very clear, this research only spoke to 67 people who took out payday loans, and that is not statistically significant.
Never mind the research, here are the facts. There's a real problem with zombie debtors, aren't there? People who just pay off the interest every month. They have a £100 loan. If they pay off just the £25 interest, leave the loan, then every month they incur another £25. In 4 months, they're paying off more in interest than the original loan. That's not right, is it?
We don't recognise that at all. The academic research that's been done, and I stress academic research, shows that 28% of our customers do extend their loans, but they only extend them on average twice. So the majority of people are borrowing these small sums of money to deal with an immediate issue, and they're paying it back. That is extremely helpful.
Stella Creasy, this is a helpful service.
Words fail me, and I think this is exactly why the industry can't be trusted to tackle many of these problems that are now facing millions of consumers across the country.
What do you want done then?
I want us to follow what they've been doing in Europe, where they've introduced effective caps on the cost of credit that means it's much more affordable for consumers. I don't actually want to put these companies out of business. I just want them to offer at a fair price. And there's countless research now, both academic and commercial, that shows just the level of profit they're making in the UK because of this lack of regulation. And that's what John's here to protect tonight.
John Lamdy, in some parts of the world, payday lending is banned. Why do you think that is?
Well, it's a great shame if that's true, because that means it's removing consumer choice, it's removing competition, and not allowing people access to small sums of money and forcing them to take out large loans. I think in the current climate, where people are concerned about their incomes, concerned about their cash flow, we shouldn't be putting them in a position where they've got to borrow large sums of money when what they really want is just a small sum.
Stella Creasy, isn't it a bit patronising to say to people that they can't choose how to look after their own finances?
That's not what I'm saying at all, but I'm saying when we can see that 30% of people who take out a payday loan are doing so to pay off another one, you can see the spiral of debt, that the extortionate interest rates that they're allowed to charge in this country, not like in other countries, are getting them into.
Though?
I don't think it's about fault. When we know that 44% of payday loans are for basics, of things like food and transport and petrol, you can see the cost of living is rising in this country. You can see that people are struggling financially. The question is, what can we do to help them? Because it's not good for Britain, when we're in an economic recession, to have people who can't afford to spend money. Now, it's very expensive in this country to be poor, and the point is, when we can see what works in other countries to tackle these problems, why aren't we just doing it?
John Lamdy, do you accept that there are some people that you shouldn't be lending money to? It would be irresponsible.
There are certainly some people that we shouldn't be lending money to, and we're not lending it to them. We offer our loans either online or through stores in the high street. Of those who are applying online for our loans, we are turning down around 9 out of 10. We do extensive checks, we make sure they're creditworthy, we make sure that they can afford to repay the loan. We are lending to people who've got bank accounts, jobs and disposable income. We are helping them. I'm sorry, but that's the fact, and our customers like the product.